Markets next. The local index will be hoping to increase gains today after what's described as a sluggish end to trade on Friday. Simon Brown, Just One Lap founder, joins us now for a market overview. Simon, good morning. Give us just an understanding of how the local index is faring so far this morning.
Morning. Friday was not a fun day on the market. Certainly we have opened green today, but really it's all about commodities. The overall market's not quite 0.1% higher. We've got financials down a fraction, a couple of points. We've got industrials down almost a third. The big mover is resources up 1.1%. Some of that is SAS. We can touch on that in a moment. The rand's trading a little bit better this morning. We're 18.64 against the dollar, 23.55 in sterling, and 20.22 against euro. If we look at commodities, gold having another really great session, $2,354 an ounce. Another all-time high there. Brent a little weaker, 89.92. The PGM's 9.44 for platinum and $1,015 an ounce on palladium.
Well, speculative buying and geopolitical tension are maintaining the gold rally. Oil slipping amid easing Middle East tension. Talk us through the impact of these developments.
Yeah, so oil is the Middle East tension. It's also, we've got supply constraints, and those supply constraints are mostly OPEC plus, and most of that, truthfully, is Saudi Arabia, who've sort of been pulling back. They want an oil price of around about $90 a barrel. That for them is a sweet spot in terms of their profitability, and they get the sense that that's not going to hinder global GDP growth too significantly. So they're comfortable in that space there. Gold really is running on inflation fears. Is inflation really over? If we look at U.S. inflation, it's pretty much gone sideways since June of last year in the low 3%, still some way off that 2% target. And even locally, we saw that February inflation number inching higher. We saw the MPC 2 weeks ago with the governor saying the risk undoubtedly to inflation is to the upside. And that's also helping gold alongside geopolitical risks, as you mentioned.
All right, so let's talk now about the Minister of Forestry, Fisheries and Environment upholding SAS South Africa's appeal. What's going on there?
This goes back about a year ago where there was a proposed change to how pollution is determined that comes out of Secunda in terms of rather than the quantum, the density. Now, SASO's always used the quantity that they're emitting, and they make the claim that this is better for the community. It gives a much better reading and a much better understanding of the actual pollution impact. The change was proposed, and SASO didn't like it. It was going to have significant impact on them. So they appealed to the minister. Late last week, the minister has agreed with SASO and said they can continue using the existing methodology, which looks at quantity rather than density of the pollution. And what that means is that the Secunda plant, at this point, I suppose it's all systems go. I mean, it wasn't closed down, but there was a risk. If they'd had to change methodology, it certainly would have cost them a packet, would have put that plant's viability at risk. Stock responding well, just over 4% higher so far this morning.
Well, let's go to this one where there's been a change in response somewhat. MultiChoice and Canal Plus now entering into a cooperation agreement, and this is regarding Canal Plus's proposed mandatory offer for MultiChoice. Is MultiChoice warming up?
They absolutely are. The first offer from Canal Plus some 2 months ago was 105 Rand. And it did seem a little bit cheeky. It was a good premium to the share price at that point in time, but it seemed a little bit cheeky. The MultiChoice board said, nope, we don't like that at all. Things got technical in that Canal Plus had gone past the 35% level, which meant the takeover regulatory panel insists that they make a mandatory offer to all the shareholders. They did that at 125 Rand about 3 weeks ago. Now what we're seeing is that Canal Plus and MultiChoice are working together exclusively on getting this deal done at that 125 Rand that you referred to. Interestingly, the one point that hasn't been addressed by either parties, and I went and read all the documents this morning, is that we have got rules around control of media, foreign control of media in this country. That hasn't been addressed. I don't know what their plan or solution is. Maybe they consider MultiChoice not to be media, it's a carrier rather than a provider. We'll find out in time. But certainly, as you say, MultiChoice, Canal Plus working, and that 125 Rand offer now official and on the table.
Actually, worth a discussion, that one on the last point that you raised about, foreign media assets in a country. And let's see how other countries have probably dealt with this as well. Thank you very much, Simon Brown. As always, we appreciate your time and your analysis.